All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world. Happy Tuesday, everybody. Today's April 22nd, 2025. And the top story this morning is one probably some of you younger guys have been regretting, lamenting, fearing for some time now. The return of student loan payments. For real this time. Maybe, probably, we think. We've been here like several times before. How long have we been talking about student loan payments coming back? We suspended student loan payments because of the vid. It's one of the many ways that we have artificially inflated this gigantic, big, fake economy is by just being like, nobody's got to pay their bills and it's going to be great and we'll all sing kumbaya. Oh, that's right. Reality eventually sets back in, and that is coming. We got confirmation from the Department of Education yesterday that starting on May 5th, student loan payments, collections on student loan payments will begin. And look, this was supposed to start back, what was it, October of 2023, I think, was when they first came back. And then there was all these court cases back and forth. And like, oh, no, we're just going to forgive billions of dollars of student loan debt. And the courts were like, no, you can't do that. And they're like, okay, we're going to forgive a few other $1 billion. Court said, no, you can't do that either. Some got forgiven, some didn't. One thing's for sure, a lot of people, millions of people, have not been paying their student loan debt. Now, look, guys, understand the effects of that, because remember the whole best economy ever thing? Remember when everybody was like, oh, the economy's so good. The problem is just your vibes are bad. You've got bad vibes. You just can't see how good you have it. And meanwhile, anybody who actually paid attention and looked under the hood and was like, oh, my God, it stinks under there, understood all the ways we were faking this economy higher. Student loan payments going away was one of them. Student loan payments, guys, when a debt is paid back, when you make payments on a loan and some of that principal goes down, money is destroyed. Paying your debts is deflationary. And do you think maybe one of the reasons why inflation just won't go down is because we've been pretending like nobody needs to pay their debts for years? And did you really think that kind of sugar high economics wasn't going to have bad effects? Did you really think you can stuff your face with powdered Kool-Aid and it wouldn't cause problems? That's what this economy has been doing. Instead of destroying that money by paying back the debts, it's been out there chasing consumer goods and services, driving those prices higher. In other words, it's been very inflationary. You know what else it's done? It's caused artificially high consumer spending numbers in our GDP reports, so it's made the economy look like it was growing faster when really all it was pain deferred, making long-term problems worse. And when you combine that with that stupid FHA program that Melody Wright and John Comiskey came on the channel twice to talk about in the last few weeks, highly recommend you check those out, where like, oh, people don't have to pay their mortgages either. Just think about all the ways we have been faking this economy. And now look, all these programs are coming to an end and everybody's going to be like, oh my God, the economy was so good. What happened? The economy was never good. It was always fake. Now, look, there's a lot of people who are going to be like, oh, this isn't fair. The rich don't pay any taxes. I shouldn't have to pay my loans. False dichotomy. It's a straw man argument. Pay your bills. This should not be a controversial opinion. This should not be considered heartless or soulless. When people don't pay their bills, somebody else is paying the bill for them. In this case, the American taxpayers have been on the hook for all these student loan payments. And it's not fair. Pay attention, college kids. Those people that you mock, the people who will cut your grass or build your house or replace your drywall, all those people you look down your nose at should not have to pay for your education. Sorry, life is hard. Did you overpay? Did you overcommit for a liberal arts degree that doesn't really make you all that employable? That sucks. You were probably lied to by your guidance counselors. It doesn't mean working people should have to pay for it. That's on you. It sucks, but it's there. Now, look, the other thing about this is, what about the next kid? That's, all the people who are saying, I shouldn't have to pay my student loans because it's hard. Okay, it's hard. Maybe we can legislate away hardship somehow. No, that doesn't work that way. But what about the next kid? Because when millions of people don't pay their loans, don't pay back their debts, it means the next guy who goes to borrow, it's going to be even harder for him. So again, college kids, you're looking in the wrong direction. When you're looking over at the boomers and saying, oh, I shouldn't have to pay my bills because of them, Look in the other direction and the age spectrum. Look at those kids that are younger than you that haven't had a chance to go to college yet. Understand that their borrowing costs are going to be higher. Their access to funding is going to be less if you don't pay your bills. So look at them and run that racket about how hard it is and boo-hoo me. And see what they say. See what comes back to you, because you're a little bit older now. Now you're the old fogey who ruined things for the younger kids. Something you ought to think about. Pay your bills. What a concept in the 2020s, right? Oh, and by the way, Wall Street. Hey, how about you some of that? Commercial real estate guys, private equity firms, I don't know, banks, all you people who are just like, well, we can't pay our debts. We're going to declare bankruptcy, give ourselves a golden parachute, retire in style, and somebody else is going to be on the hook for it. Oh, yeah. F you too. You guys pay your freaking bills. This should not be controversial, but there it is. That's the big one this morning, student loans. That's the one people should be talking about. We also got a lot of going on elsewhere in the markets. We've got gold touched $3,500 last night. Came back down now. It's a little, at a more respectable 34.5. But gold just ripping. It blew right through the 3400s. The yen touched 139 handle last night. The yen has been strengthening. That USDJPY chart moving lower. Pay attention to that one, guys. That is moving down in a rather relentless fashion. And we got a couple of interesting headlines out of Japan this morning that suggests, the BOJ may be forced to hike interest rates sooner than they thought. And while rate hikes is going to make that yen problem worse, it's going to make that yen carry trade unwind faster. The Bank of Japan's got big problems. Maybe that's why Secretary Bessent is scrambling to meet with the Japanese finance minister to figure out how they are going to manage the currencies. We've also got solar tariffs. We got a pretty funny headline about solar tariffs today. Look, solar is not really something I'm all that into. You may have guessed, but when you see these numbers, maybe ask yourself, you think maybe things might have gotten a little out of hand with the whole tariff thing? Just wait and see that till you see the headlines, and then you tell me if you think maybe we got a little ahead of ourselves. We also got earnings today from the likes of Northrop Grumman, Lockheed Martin, 3M, and Verizon. Mixed bag in earnings. Things that go boom are doing all right. Some interesting things over at Verizon, maybe cost of living reflecting in their earnings. We also got some GE Aerospace and 3M giving us a little bit of forecast about the impact of tariffs. And it's not what the market was expecting. Stick around for those. And last but not least, at the end of the show, we've got a small story that may be indicating something really, really big. Something happened today. Shout out to Jack Farley on Twitter who found this one. It's a very obscure story, a tiny little firm. But if this is what I think it is, something the Bank of International Settlements warned us about years ago, oh boy, stick around to the end of the show. You don't want to miss that one. That could be a freaking huge story hiding below the radar. We got a lot to talk about this morning. Why don't we shrink my big melon of a head and let's see what's going on in the markets. Don't forget that like button for the YouTube algorithm. And if you're new here, hit subscribe because we do this every day. So come on back and have your coffee with the melon heads. Also, a shout out to my new friends on Spotify. The shows are now being uploaded to Spotify every day, so you can listen in your car, should you feel so inclined. The S&P 500 is currently up 55 points, 1% higher, catching a little bit of a bounce. Is it a dead cat? I don't know. We'll see. But the market was down pretty big yesterday. Looks like we're getting back about half to a third of those losses from yesterday. The Dow is looking pretty good here, up 416 points, continuing the buying that started at the close yesterday, 1.1% higher for the Dow. And the NASDAQ is leading the way higher, up 1.2%, 214 points to the upside. So stocks are up pretty much across the board here. Let's check in with the international indexes. We had the German DAX was down 0.5% yesterday. The British FTSE up 0.16%. The CAC 40 in France was down about 0.33%. The Spanish IBEX up 0.25%. Not a lot of movement in European stocks here. And Asia was kind of quiet as well. The Nikkei 225 was down about 0.17% yesterday. And the Chinese stocks, who cares, because the government is buying stocks to prop up their market there. There's no real price discovery going on in China, so there's no point in covering it. Meanwhile, the U.S. dollar is up about 25 basis points here, 98.6. Little bit of a recovery from yesterday, but still the dollar has been just bludgeoned over these last couple of weeks. The Sell America trade has really taken the dollar lower, sent rates higher. It's one of the reasons why gold and the yen and the euro are surging. Now, take a look at the USDJPY chart here. It's off its lows. And remember, this chart going lower is the yen strengthening. That's important. It's a little counterintuitive. 140.61. We hit a low last night on the USDJPY chart of 139.88. The yen has gotten much stronger here. It's continuing today, well below what set off that August 5th panic. Now, we got some important headlines coming out of Japan here. We've got Japan's finance minister to meet with U.S. Treasury Secretary Scott Bessent to discuss FX matters. Scott Bessent wrote the book on currency manipulation under George Soros. He was one of the guys who engineered Soros's takedown of the pound and also a big short against the yen in the 90s. So he's getting together with the Japanese finance minister. They're talking about how they are going to manage the strength of the yen here. Interesting, though, I wonder, are the central banks participating in this discussion? No mention of the Fed, no mention of the BOJ here. Now, right now, Treasury and Federal Reserve appear to be diametrically opposed to one another. We talked a lot about this on my live stream yesterday afternoon, my spontaneous stream, because the market was down over 1,000 points. The Fed seems to be working against the Treasury now. And so I'm wondering, talking about these FX matters, FX swaps, does the Treasury, can they do these FX swaps without the Federal Reserve? I don't really know, to be honest with you. Is the Federal Reserve going to somehow block this? Does the Fed want the trade war to fail? Probably. So this is going to be interesting to see how it plays out. Can Treasury go it alone without JPY backing them up? My guess is no, but they're sure as heck going to try. Now, we got some more headlines out of Japan here. Coca-Cola, Japan, to raise prices up to 23% in October. All right, we got some consumer inflation is coming to Japan. And this isn't the only one. We also got this one. Ishiba to launch a program to cut gasoline prices by 10 yen. So the Japanese government is trying to subsidize cheaper gas for the Japanese people as Coca-Cola is raising prices by 23%. Do you see the inflation in Japan? The struggling consumer in Japan? This means the Japanese central bank may have to hike interest rates sooner in order to contain that inflation. Well, if they hike interest rates, they're going to strengthen the yen even further. That's going to send this chart even lower, and that's going to lead to more chaos in that yen carry trade and the bond market. So pay attention here, guys. The Japanese are kind of trapped here, and I don't really know where they're going to go with this. I'm sure this is going to be front and center in those discussions with Secretary Bessent over the next few days. Looking over at the bond market, we've got yields are a little bit lower after surging yesterday on the long end of the yield curve. The 30-year Treasury is at 4.870. That's lower by 4 basis points. The 10-year, 4.377, down almost 3 points. Meanwhile, the 2-year yield is a little higher, 3.790. That's up almost 4 points. And the 1 month is at 4.300, down about 1 basis point. Looking over at the commodities board, gold is higher yet again, but well off its highs of the morning. Spot gold right now, $3,438. That's higher by about $14.50 or 0.4%. Spot gold hit $34.99.92 last night. Almost $3,500. We just blew right through the 34s. The June gold futures actually went above $3,500 last night. June gold was at $35.09 at its peak. Well off those highs now, $34.50 for June. Gold's been pretty volatile here. Just wow. It's been really amazing to watch this run in gold. Again, guys, gold ripping at rates like this, it's just something majorly wrong is happening in the inner workings of the economy. I don't know exactly what it is. I definitely know what's causing it. But as far as the specific plumbing of the financial system, gold just should not be running like this. And yet it is. Everybody is running for safety. Spot silver getting in on it right now, $32.77 for spot silver. That's up by about 9 cents or 0.3%. Guys, the gold to silver ratio hit 105, almost 106 last night. Again, the gold to silver ratio, that's another thing that is flashing a major economic crisis on the horizon. Copper higher by 1.48%. Platinum down about 0.2%. Palladium's higher by 0.5%, and WTI is even a little higher here. Crude oil's up by 1%, 63.03 for June WTI futures. That's up about 63 cents. Meanwhile, Bitcoin, look at this, above the 200-day moving average. Guys, this is unusual here. I mean, a lot of people push back on this. We got a lot of people on this channel that don't like Bitcoin. I get it, guys. I understand the criticisms of Bitcoin. I understand the manipulation that goes on, and I understand Michael Saylor's infinite money glitch. That bird will eventually come home to roost. But this move in Bitcoin, this counterintuitive, departure from its correlation with risk assets cannot be ignored. This is 2 days in a row now, and Bitcoin is back above its 200-day moving average, $89,656 here. Something is changing in the Bitcoin markets before our very eyes over these last 2 days. Bitcoin is behaving, at least for the last 48 hours, it's behaving somewhat like a risk-off asset. We have never seen this before. I don't know if it's going to last. Maybe it's going to correct right back down. Maybe this is just a dead cat bounce. We're going to fail this retest of the 200 moving average and resume lower along with tech stocks. Maybe that's going to happen. But pay attention to this, guys. The Bitcoin move has really surprised a lot of people these last 2 days, self-included. Now, here's the big one of the day. Involuntary collection of defaulted student loans to resume. Education Department says the payments were paused during the first term of President Donald Trump in 2020 as a response to the COVID pandemic. And look, guys, we're halfway through 2025 now. There is no excuse for COVID-era programs to still be in effect here. The only reason to continue these programs is to continue this fake economy that should not have continued as long as it did. All right. Yeah, I get this is going to hurt some people. This is going to suck. Reality is often like that. But this is so stupid that we're even talking about this right now. Pay your freaking bills. The U.S. Department of Education on Monday said it's restarting involuntary repayment of federal student loans that are in default. The payments were paused during the first term of President Trump in 2020 as a response to the COVID pandemic. Beginning May 5th, the department will begin involuntary collection through the Treasury Department's offset program, which withholds payments from the government, including tax refunds, federal salaries, and other benefits from people with past due debts to the government, the department said in a statement. Wages will be garnished following a 30-day warning, it added. American taxpayers will no longer be forced to serve as collateral for irresponsible student loan policies, said U.S. Secretary of Education Linda McMahon. The Biden administration misled borrowers. The executive branch does not have the constitutional authority to wipe debt away, nor do the loan balances simply disappear. That last part's kind of important, guys. The loan balances don't simply disappear. Just because your problems are not your problems anymore doesn't mean they're not someone else's problem. And when people don't pay their student loans and when the taxpayers just absorb that hit, it becomes everybody's problem. And that's just not fair to people who don't go to college. Pay your bills. All right, let's talk a little bit about tariffs here. Gee, guys, you think maybe we got a little ahead of ourselves on the tariff thing here? The numbers are getting kind of big. I'm just throwing that out there. U.S. imposes tariffs up to 3,521% on Southeast Asia solar imports. That's a bold move, Cotton. We'll see if it pays off for them. The U.S. set new duties as high as 35.21 on solar imports from four Southeast Asian countries, delivering a win for domestic manufacturers while intensifying headwinds already threatening the country's renewable power deployment. Now, here's the great thing. The levies will be in addition to new widespread tariffs imposed by President Donald Trump that have upended global supply chains and markets. And that is the proverbial straw that will break this economic camel's back. Not only are there 3,521% tariffs on solar panels from Southeast Asia, but that is in addition to the 10% that's already in effect from those reciprocal tariffs. So 3,531% tariffs on solar imports. Okay. Maybe I think we've said enough on this one. We're just gonna shrug that off. We must press on. Northrop Grumman cuts earnings outlook on stealth bomber costs. We got some defense contractors reporting earnings today. This one was kind of interesting. Northrop Grumman reported lower first quarter profit than analysts expected and cut its earnings outlook for the year as manufacturing costs rose and the company stepped up production in the B-21 bomber. There is the B-21 shown on screen. That is the new stealth bomber, the replacement for the aging B-2 Spirit, which is still a formidable aircraft. But that thing is expensive, as stealth bombers often are, and Northrop Grumman has taken a hit on their earnings from that. Look at that stock this morning, down 9.47% here, off by $50, $481 for shares of Northrop Grumman stock. Big hit there. Now, we've also got Lockheed Martin reporting today. Lockheed Martin's quarterly profit rises on resilient defense demand. So while the bombers are getting more expensive, it seems the fighters are doing pretty well. Lockheed Martin reported a higher first quarter profit on Tuesday and affirmed its forecast for the year on the back of resilient demand for its missile systems and fighter jets. Lockheed's aerospace business, which makes the F-35 fighter, posted a 3.1% rise in sales for the first quarter. The F-35 program has been beset by delays in rolling out a technology upgrade to give the jet better displays and processing capabilities for its electronic system. That's the Block 4 upgrade for the F-35 they're talking about there. That's a big program. It has been delayed, but now it's starting to pay dividends for them. Lockheed reported total revenue of $17.96 billion in the first quarter, up 4.5% from a year earlier. Sales during the quarter increased at all company units except their space division. That's kind of interesting. Lockheed's not really cashing in on space, but they're cashing in everywhere else. That stock is up about 3.7%, trading at $475.22 this morning. We also got earnings from GE Aerospace. This is interesting because we're getting a little sneak peek on what the effects of tariffs might be. And at least for this one, not so bad. GE Aerospace tops Q1 estimates and aims to control costs to offset tariffs. GE Aerospace shares rose in pre-market trading Tuesday after the company's first quarter results came in above expectations. The engine manufacturer reported earnings per share of $1.49 on revenue of $9.94 billion. Analysts had expected $1.26 on $9.77 billion in revenue. GE affirmed its full-year guidance, including adjusted EPS of $5.10 to $5.45. Now, that's important. Affirming five-year guidance, no cut to their guidance due to the trade war, at least not yet. The macroeconomic dynamics we are operating in today require us to take a number of strategic actions, such as controlling costs and leveraging available trade programs, GE Aerospace CEO Larry Culp said. Based on what we know today, these actions, along with our solid first quarter and commercial services backlog of over $140 billion, enable us to maintain our full-year guidance. Now, look, I think it's probably pretty easy for GE Aerospace to say this because they make engines, and they make engines in the United States almost exclusively because these are military defense engines. So there will obviously be some impact due to tariffs. I'm sure some of their parts come from overseas. They're going to have to pay retaliatory tariffs on that. Plus, there was that story about the Boeing jetliners being turned around from China. Those hold GE engines inside them. But we were talking yesterday afternoon about how India might be buying them now, so maybe no impact to GE. But so far, the tariff impact is minimal. Now, we also got earnings from 3M today. This is a big industrial name. 3M beats earnings and quantifies tariff headwind. 3M reported better than expected first quarter earnings. The maker of Post-its, Scotch tape, and other industrial goods also included a range of tariff impacts. Now, besides the earnings beat, I don't think people really are interested in the earnings beat. It's the tariff thing that's pretty interesting here. For full-year earnings, 3M maintained an earnings per share range of $7.60 to $7.90. All right, so much like GE Aerospace, they're not changing their forward guidance because of tariffs, at least not yet. But they noted that this excludes a potential tariff impact of 20 cents to 40 cents. So even that, they're saying, okay, we're going to reaffirm our guidance, but there might be a hit. But the hit that we're going to take is only going to be 20 to 40 cents on earnings of 760 to 790. So 3M is saying here, tariffs are really only going to cost us somewhere between 2 and 5% hit on our bottom line. Kind of a muted impact from earnings here. I think the market was pricing in a lot more negativity than this. And 3M stock is ripping as a result of it, higher by 4.7% this morning, trading at $1.32 ahead of the opening bell. It was higher by almost 7% a few minutes ago. So the two companies giving us a little bit of window dressing on the tariff impact, GE Aerospace and 3M, both of them kind of saying not as bad as we feared. We'll see if that holds up across the rest of the market. One more earnings report before we get into that big one I was talking about. Verizon beats expectations. Why the stock is dropping. Verizon posted a good quarter, good earnings, good revenue, but nobody cares. Here's why. Verizon also said it had lost 289,000 postpaid net phone subscribers over the quarter. That is more than the 197,000 analysts were expecting. People are dropping their Verizon plans. While the stock has so far been able to weather the storm sparked by President Trump's tariffs, one risk is that its customers will switch to cheaper plans in a scenario where the levies drive up inflation and weigh on growth. Now, look, the tariffs have not yet caused people to cancel their Verizon plans. People are canceling their Verizon plans because they can't afford life. And Verizon is expensive. They're one of the more expensive options. They're switching to cheaper alternatives. This is inflation, the inflation we've already had squeezing people, and it's hurting Verizon. Verizon's going to have to lower their prices here. The solution to higher prices is higher prices. And so, yeah, they're trying to put their Trump goggles on the story, and certainly tariffs are going to make this worse. If people are already canceling their Verizon plans because of the higher cost of living, the tariffs sure as hell aren't going to help that. But investors appeared to zero in on the subscriber losses, not the top and bottom line beats. Verizon shares are down here. They're down about 3.7%, trading at $41.35 ahead of the opening bell, down $1.58. Now, let's talk about the big one here, guys. This is one to keep a watch on. Shout out to Jack Farley on Twitter who posted this one. Jack runs the Monetary Matters podcast. He also has a YouTube channel, good channel. I watch that one often. And Jack is saying a sharp fall in the U.S. dollar has hit currency firm Argentex, multiple margin calls, and shares suspend trading. Now, if you're like me, you're looking at this name Argentex and you're saying, who? I've never heard of these guys before. I know nothing about Argentex. And I think most of you probably have heard nothing about Argentex. So why should you care? This is a small company. They have like a $52 million market cap. Why should you care? Well, Argentex is a Forex risk management firm. They help international companies manage their exposure to big swings in foreign exchange rates. You guys may have noticed we have seen some very big swings in foreign exchange rates over these last couple of days. The dollar is majorly weaker. The euro majorly stronger. Yen majorly stronger. The Forex market is a mess as this Sell America trade has been going on. And now there's this firm, Argentex, who has asked for their stock to be suspended from trading. They're getting margin called. This firm's going belly up. They're in talks with their counterparties to try to figure out how to survive here. Well, you may recall this one. This is taking us way back to the distant past when dinosaurs ruled the earth. December of 2022. Dollar debt in FX swaps and forwards. Huge, missing, and growing. You guys may recall I talked about this one in my channel back in 2022. The Bank of International Settlements put out this report in 2022 warning about this giant, invisible potential risk in markets, foreign exchange swaps. Now look at some of I'm not going to read the whole report here, but just listen to some of the numbers involved in the summary here. FX swaps, forwards, and currency swaps create forward dollar payment obligations that do not appear on balance sheets and are missing in standard debt statistics. The accountants don't see this stuff. Non-banks outside the United States owe as much as $25 trillion in such missing debt, up from $17 trillion in 2016. That was in 2022. It's probably bigger now. Non-U.S. banks owe upwards of $35 trillion. Much of this debt is very short-term, and the resulting rollover needs make for dollar funding squeezes. Policy responses to such squeezes include central bank swap lines that are set in a fog with little information about geographic distinction of the missing debt. All right, so what does all this mean? This means this problem is freaking enormous. Who is exposed to it? Nobody knows. How big is it? Nobody knows. How can we see it? We can't. FX swaps are a huge market, tens of trillions of dollars. And they were warning about this in 2022. Now, look, this firm, Argentex, all right? This is not a $35 trillion firm, right? This was a $52 million market cap. But we don't know how big Argentex's gross position was. They may have had 100 billion short on the dollar and 100 billion long on the euro, or vice versa, probably vice versa, because the dollar going down has somehow blown them up, probably because the people they have counterparties with, they're blowing up and can't pay Argentex. Now Argentex can't pay their counterparties. So this, on its face, not a huge story. This little Argentex Group PLC, tiny little FX firm, but this could be belying the beginning of a huge problem that the Bank of International Settlements warned us about back in 2022. All right, it's nothing to be freaked out over yet. It's only one firm, and it's a small one. But if this is the start of this, oh boy, watch out for that one. Shout out to Jack Farley. Thanks for spotting that one, Jack. Good catch. And let's just hope this is not what the BIS was warning us about back in 2022, because if it is, I wouldn't even begin to guess the impact on market. The numbers are just way too big there. And I just want to say thank you very much to Thomas Owen, who says gold at all-time highs, oil at 63.70 by miners. Okay, that's interesting. Cheap oil, good for miners. More expensive gold, good for miners. Here's the thing, Thomas. Have we already missed the boat on that trade? Is gold going higher? That's really the question here. Is gold going higher? Is oil going lower? As long as things don't blow up in Iran, hey, they're talking right now, maybe they don't blow up in Iran, oil probably continues lower here. Check. Is gold going to continue higher? Well, if that Bank of International Settlements thing is any indicator, oh yeah, you better believe there's going to be a flight to safety. So buying miners right now, you've probably missed the boat on most of that trade. So there might be a little bit of FOMO at work there. Just take a long, hard look on that. Also keep in mind, guys, if we're really getting into the global margin call scenario, something Michael Gayet has been warning about a lot lately, gold will sell off in that scenario. If there is a scramble for dollar liquidity, which hasn't started yet, all right, that's important. It hasn't started yet. But if we get a scramble for dollar liquidity, people are going to sell anything they have, not what they want to sell, and that will include gold if and when that happens. So a big global liquidity crunch, everything sells off, including gold in that environment. So are we there yet? Probably not. That's on the horizon. So it's a judgment call, Thomas. But you are right to point out higher gold prices and lower oil. That is rocket fuel for the miners. Thank you, sir, for supporting the channel. And thank you. KDM says Bitcoin bump due to Trump's SEC chairman taking over. That could absolutely be playing a role. I forget the guy's name, but he is a big crypto bull. And look, the SEC made perfectly clear they're just not going to make crypto a priority here. And look, there's criticisms for and against that, right? Like, why go after crypto when Wall Street is just committing crime at a rampant rate, right? I mean, the SEC has done nothing about the round tripping schemes in AI, which has created, what, an $18 trillion bubble? It's probably closer to like 14 now because the stocks have sold off a bit. But in my opinion, the bigger risk to the average investor's well-being is that, not crypto. That being said, there is so much freaking crime and fraud in cryptocurrency. These altcoins, guys, just understand you're buying scratch-offs when you buy these altcoins. Hey, you might hit, but you're probably going to lose everything, as most people who invest in altcoins end up losing everything. So just be careful with those things, man. Yeah, that's probably playing a role there. Also, Strategy bought some Bitcoin last week. They announced that in an SEC filing yesterday. That's probably contributing. But the move in Bitcoin is pretty big here, and it correlates with this move in gold and this swing in the dollar and the higher interest rates. I really think you are starting to see Bitcoin gaining a little bit of safety status. And it's counterintuitive because Bitcoin is so volatile. That flies in the face of a safe haven asset and what it means. But I look at a flight to safety taking Bitcoin higher. I can't ignore that. So I don't know if that is going to persist, or maybe that's just an outlier that's going to run its course and then we'll revert to the mean. Entirely plausible here. I just don't really know there, but I own Bitcoin. I continue to nibble. I buy a little bit of Bitcoin every week. I have set it and forget it, and I'm not going to change that strategy now. Thank you, KDM, for supporting the channel. The Beekeeper says, World Finance, there's something happening here. Oh boy, what is Buffalo Springfield? Is that what we're doing? What it is ain't exactly clear. There's a man, I don't want to say it. I'll get flagged by YouTube if I say what the man has in his hand, telling me I better beware. But yeah, there's also battle lines being drawn, that's for sure, in this trade war. Great song. And you're welcome. Thank you, Beekeeper. If there is a song to have stuck in your head, that is a good one. All right. So thank you, Beekeeper, for the good vibes that will stay with me for the duration of today's day. Maya V, member Melonhead for 13 months. Thank you, Maya, for supporting the channel. It says Tel Aviv Universal Tax Form 990 shows our government gave them free money in the amount of $615 million. I got a degree. I have 2 jobs. We just want lower payments like the SAVE. Please research. All right. Hey, look, $615 million of free money from the government. That's actually kind of low by U.S. government handout standards. Look, we support the Israeli government militarily, financially. I'm not at all surprised to see that. The SAVE plan, look, guys, you got to pay your bills. There's no way out of it. If you're looking at the money we give to Israel and you're saying, I'm not going to pay my student loans because we gave money to Israel, it's not going to work out for you. All right. You got off easy for the last couple of years. It hasn't been an easy couple of years. When I say you got off easy, it doesn't mean it has been easy. I understand the last few years haven't been easy for anyone, but they would have been a lot harder if we hadn't created this artificial boon to the economy of deferring student loan payments. That was never going to last forever. It was never meant to last forever. And now it's going away. It's going to suck for a lot of people, guys. Reality eventually catches up with us, and it's going to catch up with the housing market too. Both of these programs going away right about the same time. Thank you very much, Maya, for being a Melonhead member for 13 months. Madison Hype says, great show. Thank you. No, thank you, Madison, for supporting the channel. Thank you for everything you do for the channel and for the good vibes as well. I appreciate that. All right, guys, it's time to pay your bills. It's been fun while it lasted, but that is the reality that is with us. Watch those Forex swaps, that Argentex story. Maybe it's just a one-off little thing. Maybe the start of something bigger. I don't know. Thank you guys for the support of the channel. Thank you to my magnanimous Melonheads on Patreon and YouTube. You guys rock. Links down below to all that good stuff. Don't forget the show's now available on Spotify. Hi, Mom. Hi, Dad. I love you guys. Till next time, live small and dream big. And like and subscribe to me.